Welcome, everyone, to today's panel discussion on a topic that affects us all: inflation and its impact on personal finances. With us today are Jordan, a financial advisor with extensive experience in investment strategies, and Taylor, a recent college graduate who's been experiencing the pressures of inflation firsthand. Thank you both for joining us.
Thanks for having me, Alex. I'm looking forward to sharing insights on how to navigate these challenging economic times.
Thank you, Alex. It's great to be here and discuss something that is so relevant to my generation.
Absolutely. To kick things off, let's start with the basics. Jordan, can you explain what inflation is and why it matters to people?
Sure, inflation is essentially the rate at which the general level of prices for goods and services rises, which in turn erodes purchasing power. For example, if the inflation rate is 3%, a $100 grocery bill will cost $103 the following year. This matters because it affects everything, from how much you can buy with your salary to how you save for retirement.
Exactly. As a recent grad, I feel this directly. When I look at my budget, I see prices increasing for groceries and gas, but my salary hasn't kept up with those rising costs. It's frustrating.
That's a perfect segue into our next question, Taylor. How has inflation specifically impacted your personal finances as you've started your career?
Well, as a recent graduate with student loans, I already had a tight budget. With inflation pushing up the cost of living, I find myself having to be more frugal than ever. I've had to cut back on non-essential spending, like dining out or going to concerts, just to afford the basics.
I can understand that, Taylor. Many young adults face the same pressures. In my work, I often advise clients to adjust their budgets and prioritize essential expenses. Inflation highlights the importance of having an emergency fund and living within your means.
That's interesting. Jordan, can you elaborate on how people can adjust their budgets in response to inflation?
Absolutely. One effective strategy is to categorize expenses into needs and wants. Focus on ensuring that your essential needs, like housing, food, and transportation, are covered first. After that, look for ways to reduce discretionary spending. Consider using budgeting apps to track your expenses and identify areas for savings.
I think that's a great point. I recently started using a budgeting app, and it really helps me see where my money is going. It's made me realize how often I'd spend on little things that add up, like coffee runs or impulse purchases.
That's a smart move. Now, Jordan, can you share how inflation affects different types of investments? What should individuals consider when investing during inflationary periods?
Sure. In an inflationary environment, certain assets tend to perform better than others. Stocks, for example, often have the potential to outpace inflation over the long term because companies can raise prices to maintain profit margins. Real estate can also serve as a good hedge against inflation, since property values tend to rise over time.
That sounds promising, but as a young person just starting to invest, it can be overwhelming. I've heard mixed advice about where to put my money. Should I be looking into stocks, or is it better to save in a high-interest account?
That's a common dilemma. While high-interest savings accounts are safer and provide liquidity, their returns often don't keep pace with inflation. Investing in stocks or mutual funds can offer higher returns, but comes with increased risk. A diversified portfolio is crucial. It balances risk and potential reward. Consider starting with a small amount in an index fund, which is less risky than individual stocks.
I like the idea of index funds because they seem easier to manage. I've been hesitant to invest because I'm worried about losing money, especially with everything being so uncertain right now.
It's completely normal to feel that way, especially with inflation creating market volatility. Remember, investing is a long-term game. The stock market has its ups and downs, but historically it has yielded positive returns over longer periods. Just be sure to only invest what you can afford to leave in the market for a while.
Great advice. Now let's talk about debt. Inflation can have different effects on borrowing costs. Taylor, how has inflation influenced your approach to managing student loans?
Since I graduated with student loans, I'm always aware of how interest rates impact my repayment. With inflation rising, I'm concerned that interest rates on new loans might go up, which could affect future graduates. I'm focusing on paying off my loans as quickly as possible to minimize the interest I pay over time.
That's a smart approach, Taylor. Inflation does impact interest rates. Central banks may increase rates to control inflation, which means new borrowers will face higher costs. If you have a fixed rate loan, you're insulated from that, but variable rate loans can become significantly more expensive.
So, what advice would you give to someone like Taylor who is managing debt during an inflationary period?
Prioritize paying off high-interest debt first, as it can quickly become more burdensome during inflation. Creating a repayment plan, such as the snowball or avalanche method, can also be effective. Additionally, try to refinance if possible to secure a lower fixed rate.
That makes sense. I hadn't thought about refinancing yet, but I'll definitely look into that. It would be great to reduce my monthly payments and save on interest.
Now, let's switch gears and discuss savings. Jordan, how does inflation affect savings accounts and other low-risk savings options?
Great question. In an inflationary environment, the purchasing power of savings accounts diminishes. If your savings account offers an interest rate lower than the inflation rate, you're effectively losing money in real terms. That's why it's important to consider alternative savings options, like high-yield savings accounts or inflation-protected securities like TIPS.
I've heard of TIPS before. Are they a good option for someone just starting out, or are they more suited for experienced investors?
TIPS can be a solid option for anyone looking to protect their savings from inflation. They adjust in value based on inflation rates, which means your principal increases during inflationary periods. They may not provide the same returns as stocks, but they offer safety and stability.
It sounds like diversification in investment strategies is key. Let's discuss how inflation affects everyday expenses. Taylor, have you noticed specific areas where you've had to change your spending habits due to rising prices?
Definitely. I've had to be more conscious of how much I spend on groceries and transportation. I've started meal prepping to avoid unnecessary takeout and using public transportation more instead of driving. I also shop with a list to avoid impulse purchases. It's about making smarter choices with every dollar.
Those are excellent strategies, Taylor. The rising cost of living forces many people to reassess their spending habits. It's about being intentional with your finances and recognizing the areas where you can cut back without sacrificing your quality of life.
That's an important point. How do you think inflation will continue to influence consumer behavior in the coming years?
I think we'll see a shift toward more mindful spending. People may prioritize essential goods over luxury items and look for bargains or discounts. The trend toward online shopping may also continue as people seek out the best deals from the comfort of their homes.
I agree. I've definitely become more conscious of my spending habits and how much I can save by shopping sales or using coupons. I think this experience is teaching my generation valuable lessons about budgeting and financial literacy.
Absolutely. Speaking of financial literacy, how important is it for young people to understand inflation and its effects on their finances?
It's super important. Understanding inflation helps us make informed decisions about budgeting, investing, and saving. Many people my age don't think about these issues, but learning about them can make a big difference in financial planning.
I completely agree. Financial literacy is crucial in today's economic climate. The more knowledge people have about inflation and its effects, the better equipped they are to navigate challenges and seize opportunities.
Well said. As we wrap up, let's share some final thoughts. What advice do you both have for individuals trying to manage their finances in an inflationary environment?
My advice would be to stay informed and proactive. Monitor your budget, invest wisely, and focus on building an emergency fund. This will help you withstand economic fluctuations.
I would add that it's important to have a positive mindset. Yes, inflation can be stressful, but it also teaches us valuable lessons about financial responsibility and planning for the future. Stay adaptable, and don't be afraid to ask for help or seek guidance when needed.
Thank you both for sharing your insights today, and a thank you to our listeners for tuning in.